Hello everyone. Honestly, I'm not very convinced of this move to the upside. Yeah, obviously we still had a bit of a green day on the market on the SPY, the NASDAQ, and the IWM. The IWM was the biggest winner. The NASDAQ not so much, but the SPY lagged a bit behind and closed very strong towards the end of the day. So in today's video, I'm going to explain my thought process behind why I think the market needs to either stagnate, and I honestly I don't think that the strength can sustain itself in this upward trajectory. All right, so without further ado, let's get started with the video. So number one of the main reasons is the VIX. All right, so the VIX we know has an inverse relationship to the market. If the VIX is falling, that means that the stock market should be going up. All right, cool. Clearly we see that the VIX is very weak, right? And the VIX, the MACD indicator, is very slightly about to cross down below, right? And generally when we get a cross below, it's bearish cross, right? On the blue MACD line to the slower MACD line, it's a bearish cross. That means that you have either 1 to 2 days of neutral or bearish momentum. So as this crosses below, right here, right, we're going to get either neutral or bearish momentum to the downside on the VIX. And since the VIX is inverse, the stock market is either going to be neutral or bullish. All right, so I want you guys to take that into consideration, try to understand that, right? So basically that's the one thing, the MACD, right? The other thing is that the VIX is breaking below its major support at 17. Right, and the last time the VIX was at this level was on February 2nd. I want to show you guys what the SPY was doing on February 2nd. So February 2nd on the VIX, right, on the SPY marked the top of this move here, and we end up falling much lower afterward. So when the VIX shows a lot of weakness at major levels of support, right, that generally means an overextension to the upside on the SPY. We're not yet overextended completely on the SPY compared to what we were on February 2nd, but it just goes to show that this same trend line that we have back here from August, right, when you connect it to the February 2nd trend line, that was basically the mark of the low on the VIX at the time, and we finally just got to close above that. I'm going to talk about that afterward, but going back to the VIX, right? So clearly we closed below the February 2nd level on the VIX, all right? So now what is the next level of support? Below 17, the next level of support is going to obviously be 1650. So the last time that we were this low on the VIX was back at the end of December towards the beginning of January. And I am sure you guys might know what happened to the market during this time. So once again, just keep this in mind. We're looking at the end of December 2021, the beginning of January 2022. Okay. All right. So this is the chart of the SPY. Once again, end of December, beginning of January 2022 was this right here. So we ended up skyrocketing, stagnating a bit, consolidating, and then dropping and just continuing to drop. So that, once again, the VIX was very weak. The VIX showed a lot of weakness. It was falling much lower, right? That was supposed to be an arrow, but the VIX was showing a lot of weakness, and what ended up happening in the SPY was we stagnated a bit and we fell in the SPY. So that's where the VIX currently is. That's where the VIX is currently trading. So we're trading at that same level basically. And essentially, right, how much more room is there to go to the downside for the VIX for us to get some sort of a bounce back? And, you know, I would be very shocked to see us just easily just breaking below this level of support. But regardless, right, it's starting to make more sense to be bearish on the market, given the fact that we're at extreme levels on the VIX. The other thing is that the VIX is starting to the lower level of the Bollinger Band, which is one standard deviation away. Which is basically a standard deviation away from the 20 exponential moving average. this lower B band is starting to move upwards. So as this continues to move upwards, that means that the price of the VIX cannot fall that much further below the B band before it gets very, very overextended to the downside. Okay, so does that make sense? Like, so imagine this B band level was in free fall, right? If you were to see that, that would mean that the VIX has a lot more room to go to the downside before it becomes algorithmically overextended to the downside, because the B band is just in free fall, right? But currently the B band is curling upwards, which means that there is less room for the VIX to go down before it becomes algorithmically overextended. So once again, we can still continue to fall lower on the VIX, but we're starting to get to very, very major overextended levels, where the last time the SPY was at these levels, we ended up reversing very hard. So once again, you know, we were at this February 2nd level, we reversed very hard, and now we're at the beginning of January 2022, and we reversed very hard off that as well. So that's why I'm saying it makes more sense to lean bearish overall in the market. Also, given the fact that the lower level of the Bollinger Band is starting to move upwards, it's starting to make a bit more sense, right? That's my opinion on that. So clearly the market was green today, right? But my thought process is the market was only green today because the banks, which were a lot of the biggest losers, ended up getting some love because they did well during earnings. So JP Morgan, you could see that skyrocketed. Citigroup, Morgan Stanley, Schwab, all of these companies, BlackRock, they started to skyrocket. So a lot of the companies that were the biggest losers ended up getting some love to help propel the market up. And because these loser stocks were doing so well, it helped the IWM be the biggest winner today. And generally, since all of this stuff was happening for the past few weeks, the IWM has been the biggest loser. So this isn't an automatic reason to just be blindingly one direction in anything, right? But it's important to understand where the VIX is. It's important to understand why the market is showing this strength. And it's important to understand how much more room there is to go, in my opinion. So clearly, I mean, let's just take a look at the IWM. We bounced off the 22.6% fib, right? This is a bull flag. Things are looking bullish. We had a big green candle, but we still could not break above 180 on the IWM. We couldn't break above yesterday's high either, nor could we break above, you know, obviously the high of April 3rd, which is coincides basically with 180. We couldn't break above that. So it's not an automatic, clear-cut reason to be bullish. And even then, the banks are not something that look like they're going to be, it's not a sector that it's going to be healed. So this is, in my opinion, it's all purely just based off of like a short squeeze, essentially. When all of the banks were heavily shorted, they needed some reason to get some short covering, and that's exactly basically what happened. So because the IWM is generally not the best sector that it's not the best ETF essentially that you would want to lead the market. When you're looking at the NASDAQ, right? The NASDAQ is not showing that much strength. The NASDAQ was actually the biggest loser today, compared relatively, right? And you could look at all of the large tech stocks. So the Apple's, Nvidia did well, right? AMD, Meta, Netflix, Amazon, Google, Microsoft, all of these stocks didn't really do that hot, right? Microsoft is actually not a good, you know, whatever. But you get my point. Essentially, the large tech stocks are not comparatively doing as well as what the IWM was. And unless we get some true strength out of these tech stocks, this move is not really something that I think can sustain itself, especially given the fact that the SPY basically is keying off of the strength of the IWM, and that's not always like a good sign in my opinion. But yeah, so now we could just take a look at what's going on with the SPY on a daily, right? Pragmatically, we got one close above this downtrend level, which is good, right? Ideally, we want to see two closes above this level. So tomorrow we need to see another close above 413. And that would mean that we are comfortably trading above this downtrend level from August. So this downtrend level from back in August, it came and connected to February 2nd. And now we're here. And it looks like we closed above. So tomorrow we need another close above. So then we get two closes above. That would be confirmation for a continued move up. But the other thing is that we are still at the upper level. So here's where it gets a bit tricky, is because we're still at the upper level of this rising wedge. Rising wedges are extremely bearish patterns. And even if we were to close above tomorrow at 414, 415, 416, right? Maybe not 416, but if we close tomorrow at 415, we're still trading at the upper level of the rising wedge. Still not really that bullish. But because we would need an extreme move to the upside to break above and reclaim this reclaim this trend line, essentially. This upper trend line here. But yeah, regardless, the next thing is we still have resistance from Friday, the high of at 415, right? If we could break that, then 417 to 418 is going to be major resistance. And from here, you know, if we were to get to 417, 418 on the SPY, then, and if the VIX continues to fall lower, I mean, then it's just, the VIX just becomes super overextended to the downside. This just becomes a very amazing bull trap as people continue to buy and go long over here. People that are trying to go long-term long over here makes no sense. So it would be much like you're basically trying to go long at 470. We're very close to resistance, right? Even if you were to try to go short with a 417, 418 stop loss, right? On the spot, maybe 420, right? Even then, you still have a lot more points to go in terms of a risk reward to be short, because your targets would be down here to 400, 390, etc., right? But it doesn't make sense to try to go long up here, because where is your target? Where is your target going to be? Are we just going to melt up through resistance? So that's why it doesn't really make sense, given the fact that we're in this bearish pattern. Of course, you know, we could start to show a lot more strength, right? We went long intraday on a scalp. Things worked out. We caught the bottom of the market for today, and we ended up towards the end of the day, the contracts were up over 200-300%, but that's not really relevant. Within a few minutes after the alert, it was up 40%, right? So I'm not saying that I'm going to just automatically just look for shorts and not look at the bullish bias on anything. But from a swing standpoint, from a market like trajectory standpoint, I don't see how this could continue going up. That's why the VIX is going to be very important to continue to look at. And I would be pretty shocked. The one thing that we do have to take into consideration is that for the MACD on the SPY and the NASDAQ is we are about to cross above. So that is bullish on the MACD. And similar to what the VIX was doing, we're about to get a cross. We're about to get a bullish cross on both the VIX. Like a bearish cross on the VIX is bullish for the stock market. And we're about to get a bullish cross on the stock market as well. So from a technical standpoint, things are starting to look bullish on the stock market, but it just doesn't seem right, given the fact that where the VIX is. But yeah, I guess also given the fact that we're in a rising wedge pattern. But we have to keep an open mind. But I definitely will not be going long. Regardless of how much strength we're showing, I won't. Now's not the time to swing long, in my opinion. I would rather just scalp long. If we continue skyrocketing up, congratulations. I'm not going to be looking for like calls for 2 months out. Of course it could work, right? every day there's something that could change, right? Every single day there's always new variables and new things that end up happening. Levels are broken. Things can change every day. But immediately right now, it's much safer in my opinion to just look for shorter term scalps to the upside alongside this momentum, and maybe swings for like 1 day out, 2 day out. Swings for, you'd get them for like a week or two out, but you would only hold them overnight. So a swing calls, right? So I hope that made some sense and gave some clarity. The other thing is I want to start seeing the tech stocks showing some strength. So if the tech stocks can start showing some strength, and I don't want to see the strength being led by basically the banks having good earnings, because we know that that's not really going to be sustainable. And yeah, I guess we really just have to see how this plays out as we get the crosses on the MACD for the SPY as well as for the VIX. All right, so I hope you guys enjoyed today's video. I hope I made some sense. And regardless, we had a really good trading day. We went 3 for 3, and all of the trades were wins. The one trade, also I didn't take a trade, that ended up doing really well for the people that did take it. So yeah, I mean, regardless, things are going well in the trading spectrum of things. And yeah, hope you guys have a wonderful day. Go for a walk. The market's not going anywhere, and we're definitely not going anywhere either. We're going to continue killing it. And I hope you guys enjoyed. Make sure to like, comment, subscribe. Thank you guys so much for your love and support. And I will see you guys. I hope I can see you guys tomorrow. But in terms of streaming, I hope I could stream tomorrow. But I definitely won't be able to stream Wednesday morning because, yeah, I'm going to be have something to do. But yeah, I have court. Anyway, yeah, I will see you guys tomorrow for another update, and hopefully for the stream. All right, love you guys. Take care.